Hey guys, Mike here. So, oh boy, what a day in the market. We talked about it being volatile, and boy was it. I mean, CPI comes out, we rock it up. Here comes Jerome Powell. Boom, boom, boom. Market's all over the place. So we end up losing a little bit there because the Fed trying to be stingy with the rate cuts. Okay, so we're going to go into that right there. Plus, even bigger, I think I finally figured out what's going on with Apple. Read a post yesterday after I put out yesterday's video, which explains it because let's be real. Apple's Apple. But Apple has been acting out of character, all right? If you go into work for a boss you've been working for 17 years, and all of a sudden they start screaming at you and going crazy on you, and they've never, ever showed that side of them for 17 years, that is something that is out of character, right? And as my grandpa used to tell me, there's always an explanation. You just got to dig deep enough. So this explanation makes a lot more sense to me than what else I've heard. And then we'll go into some other stocks, like Tesla had a nice day. NVIDIA, watch out for Celsius, we'll talk about that one. Affirm, Shop, we'll talk about all those, okay? Now, real quick, just so I can say I said this, obviously the Fed said, okay, we're not cutting rates. Maybe they put in basically one rate cut this year. And so 7 see one cut, while 8 see two cuts. This means that you have the majority sees no more than one cut this year. The market, really didn't like that. And even the people questioning them didn't understand. But remember, this data that they are basing this on, some people say it's from March. They can change it. But again, they're talking about a bunch of different things, not just CPI, but they're also talking about the jobs market and things of that nature, spending. And you can see with the rate cuts here, what do we got? September, they think it's going to be a 56% chance now that's going to happen. And then when you go into November, they got about 75% chance they're going to do some rate cut, whether it's a quarter, half, whatever it may be. And so we'll see if that happens. If CPI comes in like it did today, for the first time since 2020, we've seen month over month come in net nil, nothing, zero, right? That was the thing that really got the market going. And then, of course, headline stuff ticks down a little bit. Then, obviously, still higher than what their goal is. But the month over month, will get everybody all pumped. Don't forget, we got PPI tomorrow as well. We'll go over that later. Now, as I said to the members this morning, Apple just B-slapped Microsoft and took back its crown because, again, another huge day up, puts it #1 on the list again for the largest market cap. And when you look at this right here, I mean, this is Apple, folks. I mean, it's been a insane move. When I see reports, that Apple has the most premium 2 days in a row and all this crazy mess, and people are just flying into this stuff, and you look at the RSI, and it hadn't been this overbought since 2021 and 2020. So been a minute there, okay? When I see that right there, you can look at the chart and go, that is out of character. I understand we broke a trend line, we broke all-time highs, and all that good stuff, but the fact that Apple normally either goes sideways or down after a big event, I understand Tim Cook was cute, and he said, oh, look, it's Apple intelligence, not, artificial intelligence. Yeah. Okay, and that's all great, but the only time I could find this, see if you can beat me out on this, was 2007 was the only other 2-day time frame where it was more than today, right? Because this went up almost 13 to 14% in 2 days. And this is Apple, this isn't Meta, this isn't Tesla, right? It wouldn't be out of character to see those stocks like NVIDIA go, and do these God candles, as they like to call them, or the FU candles, however you like to say it. But we had talked about, and again, I expected a move because we talked about those moving averages, right? When they get all aligned like that, especially when the 50 is charging up, about to cross the 100 and the 200. Yeah, I didn't expect that type of move, okay? So I'm like, something is going on. Something just doesn't seem right, especially with the volume we saw flow in, right? Out of nowhere. It didn't happen on the day of the event. All of a sudden the next day it's like, yay! But here's what it is, and I think this is really truly what this is. Because of diversification rules, the $67 billion technology selector fund XLK has held way fewer NVIDIA shares than Apple for months now. Currently, NVIDIA makes up roughly 6% of the fund's assets compared with 21% for the S&P Information Technology Index. If NVIDIA is larger on the reference date, they will have to flip the weights and sell Apple per Bloomberg, okay? So I don't pay for Bloomberg, but what I did was I went ahead and found a free one. Here's the title they gave on Bloomberg. NVIDIA eclipsing Apple threatens radical shakeup of $67 billion ETF. So Yahoo had it for free for me from Canada here. So such a shuffle could prompt XLK's manager, State Street Global Advisors, to load up on NVIDIA shares to the tune of $10 billion. Bloomberg calculation shows. Meanwhile, the fund would need to dump around 11 billion of Apple shares. That's not a petty transaction, particularly for Apple. If Nvidia is larger on the reference date, which is near the end of this month, they will have to flip the weights and sell Apple, said Bloomberg. And this is key. It's the latest example of how the relentless rally in tech behemoths is pushing up against the limit of regulations that date back more than 80 years, established to protect investors following the stock market crash and the Great Depression. The diversification rules can be punishing in a lopsided market. And so to me, hopefully that makes sense. So if Nvidia was bigger on said day, which is somewhere at the end of June here, they'd have to flip it, and all of a sudden Nvidia gets this huge weighting in the XLK, and all of a sudden Apple doesn't. And so a lot of people own Apple shares. Remember, it's the most heavily popular stock in the world, being owned in retirement funds and everything else, including XLK. And so you got to think to yourself, you look at those candles, you look at that, and you're like, what do you think here? Does that have something to do with it? Not that it shouldn't be moving up, but it's out of character for Apple to move up like this, okay? And especially if you saw today, because we had a big green day, and what was red all day and flat? Google, Meta, and Amazon. Of course, I told you yesterday, Microsoft was like, and as I told you yesterday, and of course I told you yesterday, talking about Microsoft getting B-slapped, you know, they were like, wait a minute. Remember I said yesterday, like, they're getting ready to set all-time highs? And of course, they set all-time highs and ended up blowing through there. Not anything like Apple, right? I mean, that's a normal candle for Microsoft, not some crazy, crazy day or whatever. But when you look out on this right here, you can see it didn't even, once it broke all-time highs, it never came back down and retested. And one thing about Microsoft is it's pretty good about breaking an all-time high, and within 2, 3, 4 days at least, coming down. Here's where it broke it in 2023. Coming back down, right there, it breaks it, right? And it comes back down, tests it multiple times before relaunching off, right? And then to set another all-time high, and it broke the all-time high, came back down the next day, retested, took off again. And so that's pretty normal for Microsoft. We'll see where this goes, but obviously still most of the money is going into Apple right now. But let me know at least what you think about that story, because it made total sense to me. Now, looking at NVIDIA, obviously I drew these 3 areas out because, price levels aren't just a line, more levels, right? And so you can see anywhere from 95 to 100, the very bottom right there, anywhere from 108 to 110, and then 100, looks like 20 to 22 right there, I believe it is. And so, this one's kind of just quietly moving up. Those top 2 are very light support, if that at all. It's really the bottom you got to think about. And you can see what's it doing. RSI divergence we talked about can go on for weeks upon weeks upon weeks with NVIDIA. You can say oversold for weeks upon weeks. You pull up the moving averages. Obviously, it's way overstretched from its moving averages. And like any other stock, eventually gravity does take effect. And so last time it took effect, it dropped it, I think it was around 22%, which of course, if gravity takes effect, somewhere between where it's at now and say it gets up to like 135, 140-ish, whatever it is, that would bring it down close to that bottom level right there. And so again, that's what we're talking about. Fibonacci is going to come into place, a bunch of influence will come into place if that happens. But right now, this thing is still getting rocket shipped. And hopefully, the one thing you guys got out of it, that I measured this for you, if it would happen today, it would bring us right down into that level, which would be fantastic. But hopefully, the one thing you got out of this stock split is what did I tell you guys? All these people are running around on Twitter and everywhere else talking about, oh, stock split, stocks sell off after stock splits. And I said, no. I did a members video and detailed this. And I told you guys, I said, no. It's about what's going on in the market. Look at Walmart. S&P was going up. Walmart had a twinge of a pullback. Away it goes. All-time highs, okay? And I showed the members many different stock splits. Tesla's got by far the worst timing of stock splits. They always do it right when we're in a crash or something. And so they end up diving, right? But NVIDIA is still going up. So if the market starts to show weakness, NVIDIA is going to show weakness. Do I expect pullbacks on the stock and people start taking profit? Sure. You would think that could happen. But I'm talking about a major pullback. Like people expect double-digit pullbacks without the market doing anything. We'll see if it happens, but it's very abnormal for that to happen, okay? So I'm just trying to tell you, and that's what you've seen so far, right? Because people were talking about before the split, should I sell now? Should I sell now? They're saying it's going to crash. And it's like, which way is the market going, right? That's the key, just which way is the market going? Right now, the market is at least pretty strong. Now, if it starts to trade sideways, you could see NVIDIA start to come down to maybe a 10% drop, maybe more, right? So we got to pay attention to that. But if it's just going to the moon, like we started off this morning, well, that's going to be kind of tough. But anyway, looking at some others here, you got Tesla. And you look at that chart, you go, it had a big day? Really? basically just got right back into this little squeeze area right here. But when you look in the 5 minute, you can see what I'm talking about, where it just started, took off, and it just did that grind all day long, just moving up until we got into the afternoon, obviously waiting for FOMC, and then it gave some of it back, but it was a nice hold for it. But with Tesla, everything seems to be dependent on this pay package for Elon Musk. I've never seen anything like it. Let me know if you have. Again, you got large shareholders coming out like this one saying, we're not voting for it. And again, this is like the 80th biggest shareholder or whatever. They own millions of shares. But again, I've read reports from other sources saying it should pass. I guess if it passes, we're going to the moon. I guess if it don't pass, the stock gets punished. That's kind of seems to be the narrative they're putting out there. Let me know what you think, if it's going to pass, and which way you think this stock is going. All right. Now, looking in a firm, we talked about this. It got its breakout. There was the news candle, and the day was the follow through. It did end up selling back down, but it held. That is the 100 moving averages on right there, as you can see. And so we'll see if this one comes up. Again, it's a big mover if it does move. This is all about the Apple partnership, all that good stuff. But, as you can see, it lost 8% just like that. And so I think it was up 10 total. But again, levels, if this starts to continue to move up tomorrow, you're looking around 39.48, somewhere in there. And then we end up going up to 40.13. And then if we go for Valhalla, you're looking like 49. I don't know if it's going to reach that kind of stuff. But again, we'll see. This is all based on that partnership. Looking at SHOP, we talked about this one. I believe it's 12 straight green candles right now. But it ran into the 50 moving average and got slapped down right there. And so, this one, what you really want to see is this. This is the weekly. If that RSI can break above that moving average and get above the 50 level, boy, that would be really, really good for SHOP. Okay, and again, we'll see if this is just this pre-notion to what's going to happen to IWM, because they work with all these small cap stocks and everything, and normally IWM and SHOP moves in the same direction I showed you yesterday. But up above, you got the 200 moving average is going to be brutal, right? Still around that 68, 69 area. So that's going to be brutal as far as resistance. And I think, do we need some kind of pullback? Yeah, I think it actually does need a consolidator pullback, but that's just me. Now, when you look at the Fibonacci levels, again, right around 200 is when you start to get into the discount range and stuff, right? Up around that golden pocket area. And so, especially at the 50 right there, as you can see, that's when you normally will start to get some pullbacks. It's in that RTH gap. That'll be about 50% of the gap filled. And so, be expecting that. Don't be surprised. Now, TLT right here, you can see, obviously, it loved it because yields have been dropping off, right? And this is a good retest, right? Came down after it broke out that channel, retested that top trend line, bounced, all right? But this is not one of those ones that's going to make you rich unless you own a crap ton of options or a crap ton of TLT. But again, you can see the levels all drawn out for you, right? You get 94.80. I'm actually going to pull this down. And again, you can see the levels kind of just marked out for you when you look at this one, right? I mean, it's sitting right there at resistance. If it breaks above that, clearly we can sit there and go to 95.60. Clear away from there, 97.68. Clear away from there, 98.37. And understand there's a trend line up there, okay? There's a trend line, as you can see right there. This thing goes, I'm getting the weekly, all the way back to 2003. All right, so if this thing gets above that, you can see how it was support for a long time. Support, support, support right there. Then it breaks down, comes back up, retest, fails, tries to come back up again, hits it again, retest, fails again right there. And so if it gets above that, then boy, you're talking about somewhere in the neighborhood of 101 to 102, depending on when it would hit it. Then you're talking about some jet fuel if it breaks that thing right there. We've seen what happens with the long-term trend lines when they're broken, right? Now, Celsius, as I always say, do not jump on a falling knife. That's what this thing is. You got to wait, okay? A lot of people jumped in when it got back down right there. They jumped in at the 200, and it still continues to fall. There is this trend line right here, which is what I'm eyeballing the most, and that goes back to 2023 when we started this huge run-up right here. It's bounced off of it multiple times. Will this be another time where it bounces, okay? And when you look at the fibs also, it is a huge discount range. There's stuff going on behind the scenes with this stock about revenue and things of this nature. But we'll see when it hits that trend line, because again, you look for confluence, right? So when you bring this down, you're in a huge discount window, okay? It's coming down, it's past the 0.7 fib, coming down to the 0.79 fib, and lines up perfectly with that trend line right there. So don't be surprised if you get a bounce there, but I would just wait for confirmation. Again, you do what you want to do, not financial advice in any way, shape, or form. Lastly here, you guys asked about KRE. When you look at KRE, this right here is the regional bank ETF, and when rates go down, KRE loves it, okay? But it ran to a super brick wall today, and the 50 and 100 right there combining and got rejected and slapped back down into this area, which you've seen bounce many, many times so far, okay? So a little area, shaded area right there. But that trend line, again, will be resistance, okay? We broke out of it before. We've had plenty of false breakouts. And it's all about the rates with this one, because this is why the regional banks are underwater, because of what? Their bond portfolios are just hot turds, garbage, doo-doo, right? Weighing them down. Okay, this is why Powell said most likely you see other regional banks fail, because they'll be forcing to sell in those and losses to raise capital and all that stuff. So we'll see if that happens. Now, looking at earnings, really nothing big. Adobe, RH probably is what you're looking at here. RH is one of those stocks I think we talked about coming as support. All the rest of those stocks have bounced that we talked about. Now, you will have core PPI and then regular PPI and then unemployment claims before the market opens, and then a 30-year bond auction at 1 p.m. We did the 10-year, yields dropped, and IWM took off, right? So we'll see what the demand for the 30-year. I don't know who in the world is buying a 30-year. There's no way I'd buy a 30-year. But, you know, let me know if you're a bond expert and why you would buy a 30-year right now. It makes no sense to me. We can just get the 10. But anyway, we're about the same rate. But it doesn't make any sense to me. So, you know, we'll see, though. I mean, I think the 30-year came in last time okay. And sometimes it just, as long as it comes in fine, the market don't care. We're moving on, right? It's like, does the market really care about CPI anymore now that it's showing that it's slowed down? They care more about the Fed and the rate hike stuff, because they basically ignored anything Powell was saying today and was like, no, we're good, you know. And so as I showed you, September, November, December, also they're still pricing in these cuts, even though the Fed's like, nope, not going to do it, not going to do it. And I will ask you a question. I'll wait till the end of the video to do this. Which one would you be more upset about? Would you be more upset about the Fed cutting too early and then inflation starting to go back up to say 4, 4.5, maybe 5, right? We forget about that 9 crap. Maybe that, right? If that happened, all right? And which means those prices you're so upset about, we're all so upset about, would take a whole boatload longer to ever even think about coming down. Or would you be more upset about them just not cutting and running us into a recession where, you know, unemployment, let's say, goes to 5, 5.5, normal recession, not like a financial crisis or anything, but normal recession, right? So a lot of people lose their jobs, but obviously they'll probably cut rates to 0, right? So people, you know, all that good stuff will happen and stocks will go down 30, 40, 50, 60% and all that good stuff. Which one would you be more upset about? So I'm curious. Or which one would you be more happy about? Just make sure you're clarified, and we'll see what all you guys come up with. So hopefully you guys got some out of it as usual. Hit the like and subscribe button, please, on your way out. Really appreciate it. If you want to sign up for the membership, less than McDonald's combo, you can do that as well. Tells you exactly what you get. And I'll see you guys tomorrow.